Hey, everybody. Wow, what a difference a day makes. Let's jump in with a little bit. What a difference a day makes. Wife, let's jump audio. I always play that to make sure I can hear myself and I'm not talking to myself. Thank you all for being here. It's been a rocky road, a crazy 72 hours, then last 24 hours, but wow. Anyway, we're just going to share what I see, what I do, and everything else. So let me make sure I got the right camera on. And we're going to talk about today how inflation cooling ignited a huge rally. And if we wanted decoupling from the traditional markets, well, holy, crypto and equities certainly did that. I'm going to start by talking about equities today. Before I go down that direction, I'm going to talk about a quick disclaimer about the channel. I know, I can sense the temperature of the room when the markets are hard and brutal. But I share everything I do openly and transparently. Every trade I do, every transfer I make, I share it on Patreon, okay? And I don't always get it right. But, as you can see, I got into, there's a little story about the history of all this. I got into Bitcoin first in 2017. Yeah, late to the party, but, dabbling, and then just gradually accumulating because of its hardness. Then I got into Ethereum second. I said, well, I'm going to degen a little bit. Bought some Ethereum. First Ethereum I bought was about $90, and the average about $200. Then I needed an ETH hedge, and I did a lot of research in early 2021, and I found it, and that was Solana, and Solana got a kick in the teeth. Yes, I know, I have it. I have not sold one token, okay, during all of this. In fact, I accumulated. But as you know from this channel as well, sorry for this little disclaimer rant, but I focus on threes. I like threes. It's a good luck number for me, although it may not appear that way. This is the worst market experience I've had in 33 years in the markets. I'm surprised I even have any teeth left, but it's still possible to make money. Chip away, do a little trade, a little scalp here and there. It's still possible to do, and the volatility helps that. But yes, my Solana bag is underwater. It broke even on Saturday for the first time. And I don't know, since November 20, no, I don't know, early 2022. I can't remember the exact time, but it broke even on Saturday and then came crashing down again. But it doesn't change my thesis. I'm in this for the long haul. It's part of my hodl bag. If layer ones become something, I believe Solana will go far. I chose not to buy any other tokens because I thought Solana was the best after Ethereum. And because I do things in threes, I only have room for 3 in my stable. And that's where we are. Anytime I deviate and I degen into something, it doesn't work out. So I have that same focus. Exact same focus as well with equities. Heavy position in Tesla. Second biggest position is Google. And then I actually got into the metaverse, believe it or not, Meta, Facebook, which I never thought I'd buy in like 6 years. Anyway, I got into that recently as well. And I trade that, but it's not my hodl bag. So that's kind of a little bit about what I do and my focus, okay? And of course, my 3 legs of my stool: real estate, equities, crypto. Crypto, hard underwater, real estate, extremely positive. I'll do a video on that shortly on kind of the last 2.5 decades of real estate investing, and equities. That's how I got real estate. Made money in equities, funneled it into real estate. And that's the story. So let's talk about the good news. Sorry for that long intro, but these people are just full of venom and hate from what happened with Sam Bankman-Fried and FTX. Yes, we always say don't keep any crypto on exchanges. That's the one thing we've learned. I don't need to talk about that anymore. Anyway, after a huge volatile last 48 hours, the last 24 hours have been very interesting. Inflation hit 7.7%, its lowest level since January 2022. And the markets were on fire. And I did say last week the true inflation numbers are crashing down. I showed a little chart. I can't remember which day it was, about a week or 10 days ago. And it was going to bode well for the inflation number this week. So I was very confident. But there was other stuff going on, like president or midterm elections in the US and everything else. So everything's kind of messy. But let's talk about one of the guys that I do follow and I admire very much is Mohamed El-Erian. He says, what a memorable day for markets, with every asset, stocks, bonds, precious metals, yes, even crypto, registering massive gains. He probably wasn't looking at what happened yesterday. But anyway, to state the obvious, CPI data triggered a strong technical that incentivized all types of investors to scramble for more immediate market exposure, ladies and gentlemen. The markets are loving it. They're in search of exposure. They're going risk on. The stuff I've been talking about for a long time. The markets don't wait for full pivots. Markets don't wait to bottom out before a recession is announced. Everything is front run, okay? We'll show some more data as well. This is from another guy who is a top-notch web monkey. I see you. Thank you. From Team Canada. So this is from Benzinga, and they were talking about a dovish pivot. Headline CPI rose 7.7% in October after economists expected an 8% jump. That is 30 basis points below expectations. But Robin Brooks said something very, very important. The US just isn't an overheating story anymore. It's time for a dovish pivot for sure now. And basically, there's a lot of talk about how, the Fed, like all the top economists, top finance professors, top capital allocators all over the world are calling for don't tighten so aggressively. You're going to smash everything. Robin Brooks, the chief economist for IIF, the Institute of International Finance, and he echoed a similar sentiment, and he called for a Fed pivot, and he believes they're probably going to do that. But of course, they're not going to pivot entirely. Some people are calling it a swivel now. So they'll slow down first and then get to zero, and we'll see where it goes from there. But this was his chart as well from Robin Brooks. And here, this chart, according to him, makes us Fed doves over the summer. Now, combined weight of items within the US CPI with month-over-month inflation, it is still greater than 2%, but it's the rapid fall that began in July, which is most interesting to look at. And when you look at the components in different colors, you've got pink. Used car and trucks are now deflationary. They are going down in value. They're not going up anymore. Therefore, they're under the zero line. You've got your goods kind of just breaking even, about to go -2 probably, especially with the crazy amount of inventory that's available. Services, still high. Less owner's equivalent rent. Owner's equivalent rent is going down because the recession is warming up, despite many say it's not there. So overall, when you break it all down, it's a good picture. But let's talk about this as well, what the Fed is planning to do on December 14th, 2022. And now the 50 basis point hike is 85% certain at this stage. And that will probably increase a little bit. So again, going from 75, 75, 75, 75 down to 50, they're swiveling, changing direction. Not a full pivot yet. And of course, who doesn't like this? Well, the dollar index does not like this at all. It tanks. So a couple of days ago, I think it was Tuesday, Octa Tuesday, I showed this chart of how the Dixie shot up very close to that 114, 113 and a half level, and then straight down again. And after the inflation number, it just fell out of bed and tanked. And that's what we like to see, because we know there's inverse correlation between that and things like Bitcoin. And we'll talk about crypto towards the end, don't worry. But the stocks is the real story for today. Stocks were on a tear. Cooling inflation is fueling the rally. And that's kind of the big story today, because with the new numbers from the CPI, which of course, as I always say, is very contrived, there is hope that the Fed will slow down or even pause interest rate hikes as they bring in the data. And again, they're always 6 months behind the curve, but they'll get there eventually. That's why the market's going risk on. That's why Mohammed Al-Arian is so excited. Now, this is a piece of history we all just lived through today. S&P 500, which is SPX, had the record day, the second highest ever performance in percentage terms on record in the history of the world. The highest time was December 2008. We all know what happened. Right after that was a vicious bear market rally right preceding the global financial crisis. But anyway, enough of that history. But that is stunning to see that the market went up so much. So let's look at the S&P 500 as well. It's funny, we talked about decoupling, and I spoke about kind of 3,500 at the time when people really allocate into the market being the bottom. And here we are right now. The bottom hit, I think, 42 days ago or 33 days ago. I'm not sure. I think it's, I can't even see it in my hand. The font is too small. It's less than a month ago, I think. 29 days ago, according to the little blue box. And since then, the market, the S&P 500 is right up 13%. The top, the all-time high is 48.18, and we are a good bit away from that. But again, we'll see where we go from here. But it's looking to be pretty good. As I always told you, 93, 97% of the gains, I can't remember the exact numbers, for the stock market over the last 70 years happen in November and December. We're in that period despite the contagion that hit the markets yesterday. We'll talk more about that right now as we switch gears into crypto. So ETH, little article here. ETH pumps 14% in 24 hours. What's next for ETH? Well, that doesn't matter because it got hammered the day before. It went down, I think, under $1,100. But that's kind of not really a big story right now. The big story really is this. To talk about Bitcoin for a second, Bitcoin is an unforgiving phenomenon. The sheer reality of what I've always fallen in love with is that 21 million limit, of which 5 million coins are probably lost, and the intrinsic inability to print any more should put everyone's ego on mute. And this is key. After what we've been through this year with Zuzu, Kyle Davis, Alex Mashinsky, Do Kwon, Sam Bankman-Fried now, the latest, they all have one thing in common, and that is greed and leverage. And that has screwed the pooch. And this is why we need something hard we can trust, like Bitcoin. Okay? That's all. It's you and your wallet. Jump onto exchange, grab some, take it off, and use it as you need it going forward in the future. Now, in addition, regarding Bitcoin, this is the Bitcoin option action coming up. You can see here there is more put open interest for the expiry tomorrow than there is call open interest, which is unusual. Now, the key numbers here, just to break them down, if Bitcoin lands between 16 and 18,000, the bears will dominate and they'll pocket $200 million. So the bears would love to see Bitcoin between 16 and 18 tomorrow. Right now, we're just shy of 18K, 17,650, and they're a bit away from that. Now, the next tranche, the 18 to 19K, the bears will still win a little bit, 140 million, not 200 million, but pretty good. And if Bitcoin lands tomorrow between 19 and 20,000, that results with the bears still winning about $40 million. Anything over 20K, the bulls win. But that is just an interesting view to where things will go. And typically before option expiry, there's a little bit of excitement and a little bit of manipulation, but I think we could close around 18,000 by expiry tomorrow. Now let's look at Polygon Matic. This was one I was tempted to buy yesterday because we saw it on such a rampage over the last couple of days before the nasty stuff hit with FTX, the Black Swan event, as people call it, the crypto contagion, as I call it. But look at this volatility. And I would have bought something else instead. It went up 53% in 2 days. And then it came down 42% in 2 days. By the way, it looks like the red arrow is larger than the green arrow. Yes, it is. It's true. The up percentages always add more. So for example, well, we'll talk more about another one, a huge up percentage just in about 24 hours in a minute. But then Matic goes up another 46% in 1 day. So again, up 53%, down 42% in 2 days, both in 2 days, and then up 46% in 1 day. That is stunning activity. And this is how there are still possible ways to make money in these markets. Let's look at the elephant in the room here, Solana. It tanked down 50% in 1 day. Yes, we all lived through that and a lot of people were hurt. And then it rebounded 65% in 1 day. In fact, from top to bottom, Solana went down below $12 yesterday. It was $11 and change, and it was over 20, nearly hit 21 today at one stage. And that technically is over a 90% gain just in 20 hours. I think it was 90% gain in 19 hours at one stage this morning. So stunning. So this crypto world is still extremely volatile. So as I always say, wear your seatbelts, ladies and gentlemen. Now, because of all the action out there in the market, there was an outage on Ledger. In full disclosure, I do have a Ledger, and I use it for a very specific purpose. But they had an outage of their own because so many people all of a sudden were trying to process withdrawals from exchanges and put stuff on their cold wallet. And they had an outage. Trezor did not have any outage at all, but maybe Ledger's more powerful. But it was a short-term glitch. I think they fixed everything within a short amount of time. And in other exchange news, a lot of FUD out there right now regarding Kucoin. The Kucoin CEO officially denies rumors of exchange being insolvent. There was some transaction that they did. They moved ERC20 USDT to TRC20 USDT. So two different versions. Nansen reported that there was a big move of money, but they only track ERC20 tokens, not the TRC20, which is the own Tron version of Ethereum. And it did not show up, and it was mistakenly interpreted as an outflow. But again, the Kucoin CEO is trying to tell everybody, don't worry. But the problem is, we've heard, don't worry, everything is fine before. So, you know what to do. Verify, don't trust. Now let's go back and talk about a bit of stock market stuff for a second after that little jump into the cryptoverse. So we said stocks are on a tear, Ethereum pumps, and this key part here, Dan Ives, big fan of his, he came out and he said, well, I don't like what Elon Musk is doing with Twitter. He believes it's giving Tesla a bad name. He believes it's taking focus away from Elon on Tesla. And he lowered his Tesla price target from $300 down to $250, but it's still a 40+% upside from where we are right now. And he keeps his rating as an outperform rating, but he's just worried about the distraction that Twitter is causing. And yes, it's been a PR nightmare, between having to lay off thousands, between having to sell Tesla stock to fund Twitter, etc., that is upsetting hardcore Tesla investors. I am a Tesla investor. I think he's going to spend 3 weeks straightening out Twitter, and then be back on base between SpaceX and Tesla and the Boring Company and whatever else this man does. But I think it's important to have this town hall, so I don't mind. I don't think it'll cause more than a blip over maybe a period of a quarter, and then Tesla will be back on. But again, even at that, just reducing his price target from 300 to 250, not a big deal. And of course, Elon Musk had to sell Tesla shares to save Twitter. He's talking about how Twitter is burning $4 million a month. He's going to turn that around in the space of 3 weeks with the new blue tick at $8. I know a lot of people are going to pay for that, including me. I could never get verified on Twitter. No matter how hard we tried, we eventually gave up. Hopefully that'll happen. And who swooped in and bought the dip on Tesla? Of course, Cathie Woods from ARKK. She bought 27,594 shares, which is a big chunk yesterday. So with that, good old Cathie's buying the dip, and hopefully it'll make ARK perform a little bit better over time. Last story of the day, and before I let you go, and reminder, DCA is tomorrow on Ben's channel, and that'll be a fun one. I know there'll be a lot of people gloating from a certain army, which will remain nameless, but mortgage applications hit a 22-year low. And analysts say there's no sign of rebound because the mortgage rates have gone through the roof. There are mortgage companies that have had to lay off all their staff because there's simply no business. And nobody's refinancing, nobody's buying. The real estate market has absolutely stopped. Real estate developers are offering people 15% off, 20% off just to take property off their hands. So remember, I said, between Thanksgiving and end of January, could be a good time to snipe property. Things are going to get worse before they get better on the real estate market. So keep that in mind, everybody. Remember, 3 legs of the stool as we go forward. So that's kind of the news today. Crazy day in the market. Hope everybody's well out there. Big thank you to everybody in the audience. And I'll see you all tomorrow on DCA. Thanks all.